Another big mover to the other side recently has been lumber prices. Lumber prices have soared, hitting new records, and home buyers could potentially be on the hook for this. We want to talk about what this means for the housing sector. And for that, we want to bring in Jeff Taylor. He's a co-founder and managing partner of Mphasis Digital Risk. And Jeff, great to speak with you again. Let's just talk about what we're seeing play out with lumber prices because it continued to soar to new records. I guess, how significantly do you expect this to drive up the price of homes in the near future?
Well, first, thank you so much for having me back again. Let's put this in perspective. A year ago today, lumber prices are up 340% in 1 year. 3 months ago, the rising lumber prices added $24,000 to a new house. Today, 3 months later, it's $36,000. This is a significant issue on both sides. One, from an affordability, from a buyer's perspective, the prices keep actually inching up. But more importantly, if you're a home builder, right, and we all know there's about 4 million houses they could build today that there's demand for, how do you continuously price a house that's going to be 9-12 months, it's going to be ready for the consumer to actually move in 9-12 months down the road when you have your largest ingredient in home prices with this kind of a price escalation? So we've got a challenge on both sides. The good news is there's no shortage of demand for housing, and we have a very, very strong housing industry.
One of the investment banks put out a note saying that this is not a bubble, what we're watching in the escalation of housing prices. So, I mean, you're in South Florida, which knows the ups and downs of real estate. Is there going to come a point as you look at the mortgage data that Mphasis actually aggregates, do you see at any point a breather so that people can get in on this?
So I definitely don't see a bubble, but right now there's definitely, I think, a difference in between what something is worth and what somebody's willing to pay. And right now across the country nationally, we're seeing the latter, which is what people are willing to pay. So whether that comes back in price over the next year or two, people have to be thoughtful about what they're paying for. Here's a really important data points you want to look at. Number one, the loan products that are out there today are very solid since the financial crisis. So the borrowers who are in these homes can afford these homes and have been making payments. Even the borrowers that are in forbearance, 2.6 million of them right now, 92% of those borrowers are current. Okay, so I don't see a bubble, but I definitely would caution people looking to jump into the housing market right now, especially the millennials who are either living at home or renting, to be thoughtful about, listen, is what I'm paying a good investment over the long run, or is it maybe 10-15% higher than it was a year ago because of the supply-demand imbalance that we currently have?
Jeff, how would you compare what we're seeing in the higher end, the more luxury homes, the bigger homes, compared to those entry-level homes? Because we talked about the fact, at least going back to the start of the pandemic, there was a much larger supply of those larger homes than what we saw at the entry level.
It's a great question. I think it goes back to what Adam just asked me, which I didn't answer, which was Miami. It tends to have on the higher price points. I think that they were medium to very hot maybe a year ago. Since January, we have seen bidding wars at every price point, but especially the high end, as you see people coming in from Boston, Chicago, New York. Everywhere is trying to escape sort of the cold weather and what's perceived to be rising tax rates and coming down. So if you're in Florida and Texas, it's across the board, the price increases. But I would say since January, you're probably 14% higher in the luxury housing market.
Jeff, always great to have you on the program. Jeff Taylor, co-founder and managing partner of Mphasis Digital Risk.